What's good, y'all? It's your boy Reek got options, and like I always say, whether the market's up or down, we see green. But we seen a lot of green Friday, but that wasn't because the market was green. It's because the market dumped and we attacked puts in the Discord. We made a lot of money playing the downside, but why is this downside coming? First of all, we had non-farm payrolls and the data was good. And when you have good jobs data, that means the market's going to come down. When you have bad jobs data, the market's going to go up. But what I want you guys to pay attention to is this big red candle right here, because do we get a continuation to the downside, possibly find support at 733, or do we flush? Same thing with triple Qs. So when you're looking at triple Qs, we have this same movement right here, a breakdown below the 21 EMA and possible support right here around this 698 area. If it doesn't bounce right here, then shoot, we're going to flush to the 50 EMA. But before we get into that, we're going to go to SPY. We're going to show you guys how to prepare for what's going to go on the month of June. So what you want to do is leave your daily chart, go to the monthly. Once you get to your monthly, you want to check out the previous month high and low. So you want to go from May's high and low with your Fibonacci retracements. All you got to do is this right here. Boom. Take your fibs, May's high and low. And then now you can see your support resistance levels, your 70% retracement level, 50% retracement level, so on and so forth. You see the 38% retracement level is kind of matched up with my support right here. So I'm gonna just take this out of here and we're just gonna get this clean, and you see that we flushed all the way down this month already, the 78%, the 66618, and we found support right here at the 50% retracement level. So this month could be salvaged if SPY does not break below 736, but if it does and it gets below 731.67, then it's going to be some trouble. So from then on, now you can shorten it up. You can go to the weekly to see how you're going to react on a weekly. Nice supports right here, especially at the 30% retracement level. And then you go to the daily, and then boom, you see that we could possibly get the bounce right here, because that's where we had the reversal on May 19th, and then we started running up to the highs. Okay, but if we break down from this area, it's going to be bad. You see the area confluence with the 23% retracement level and the 725 723 area. All that is good, especially this gap fill right here. We did have some resistance at this area, and then we gapped up. So this could turn into support if this resistance is strong, which it wasn't right here, because we tried it twice and then broke through. So if we flush through the support right here, we don't get the support resistance flips, we're going to test this 50 EMA, then drop to the last line of defense, which is 714, before you fall all the way to the 200 EMA. Right now, you're looking at the Fibonacci retracements from the previous month high and low, and it's currently holding 737, but that's just on the daily. If we look at extended hours, we go to at least the 4 hour, right? You see we broke down from there and we're actually under this level. We're at 735. So you have to recapture 736 and 740 in order to keep going up. All right. You can do the same exact thing if you go to the monthly and then go to triple Qs. All right. You can go from previous month high, previous month low, and check the same thing out. So I just want to clear this up. These fibs you see here is my multi-year Fibonacci retracement levels. We don't need to worry about those right now. Take those fibs, do the same exact thing, and now you're prepared to trade for the rest of the month. We're holding a 50% retracement level right here, 705. You lose that, you drop another 10 points to 696, 695. All right, it's not looking good for triple Qs right now. You walk it down, look at the weekly, and see that, hey, this 30% retracement level was good. 696.46 was a strong area. We lose that. 23% retracement level, 9 EMA on the weekly. If we do not hold 685, then yes, you can drop down to 668, and then 651. We're already starting a market correction with Friday's move, but if we do get a dead cat bounce, I predict it to be somewhere up into the 713 range on triple Qs. But if we don't get that dead cat bounce, we could just keep falling down here. Dead cat bounce, come up to resistance at 713. A continuation could send it all the way back up to the 78% retracement level of 726. Rejection 713, then 705, and then boom, 695. It's a quick, simple, easy way to prepare. The market is primed for a correction now. We did start to top out a little bit, but right now how it's looking is not looking healthy with this big body bearish candle. So we had till futures opens in a couple hours. If futures open and they're good, then you're in a good spot. But right now it's looking like we could start dropping down to find support the 50 EMA on triple Qs, and definitely on SPY. So pay attention to that. And like I always say, whether the market's up or down, we see green. Peace.